Welcome back to Digital Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at @BackupBradley above at the top of the screen. And everything that we're talking about here today, we're going to have a conversation about this lady right here, Judy Shelton, who is up for her confirmation for the Federal Reserve in just, 6 days, I believe? Yeah, 6 days. So amazing stuff, and it'll be amazing to see if she does get confirmed. We're going to talk about a lot of stuff that she's talking about. We're going to hear some sound bites from her. Before we do, let's get into the news here and a few pieces of information before we dive into our real conversation for this video. One, shout out to Win, who's absolutely crushing it over there with the XRP Labs team and everybody on that team. XRP ledger-based banking app set massive upgrade with 60-plus additions, changes, and fixes. Now, I'm not going to run you through all of them, but they are talking about the Sum app, XUMM, I believe it's pronounced Sum. So shout out to Win and all the hard work that their team is doing, and it'll be exciting to see what those additions and changes to the app are. We'll keep an eye on that. Let's move quickly to the next piece. Number of crypto merchants accepting XRP has surged by 46% so far this year. Wow. Pretty exciting stuff. These are the kinds of things we want to see, right? All right, then there was an article here that came out, XLM likely to rise after consolidation while XRP prepares for massive upward move. Targets are 28 to 30 cents. I'm not going to read this little article here to you, but I think it's exciting that people are looking for a little bump, maybe get close to 30 cents or hit the 30 cent mark. I know we'd all be excited to see any kind of positive motion for the asset, right? All right, or for the currency. Let's just say currency, because I believe XRP is a currency. So we'd love to see the currency come up in value. All right, let's keep this moving, because now we start to get into the topics of the day. We're going to look at the massive implication of what this is and the next thing, and then the next thing, and the next thing. So thank you, Matthew Linei, and thank you all the researchers out here in the community who are amazing, provide great information. ACI Ripple Partner integrates with Indian company Mindashare. 70% of UPI's transactions are processed through customers' banks of MindGate solution in India. The idea is to replicate UPI model globally. You look at some of these screenshots here. This is from October 2018 and updated on 2019 from the article. It says ACI Worldwide deploys Ripple solution. We're connected. Then here we have we are a strategic investor in MindGate at this point. Their plans are our plans, and we are already working with them in Saudi Arabia and a few other places. The investment is the kind of tribute to UPI, and other countries have been studying the UPI model, so it makes sense behind this investment. The beauty of us being present in many countries is that we can globalize UPI. Our main focus is making UPI scale and work in India and then expand it to the rest of the world. Philip Heasley, CEO, President of ACI Worldwide. Fantastic stuff. And ACI MindGate to globalize UPI, and then here it's just more of the same, reaffirming what they're working on. Fantastic stuff from Matthew Linei. Now, these are huge, right? You know, the India market, and then we're looking at SBI. Let's go back. I skipped that one by accident. So SBI, remember this article about SBI invest $30 million into B2C2, largest proclaimed market maker in XRP? Well, pretty remarkable. SBI investing $30 million in a major crypto liquidity startup soon after revealing Japan's first digital fund comprising 50% XRP in that fund. These last two pieces of information here are showing huge signs to me over time of what the impact could be in the market. These are just two things we're pointing to. Now, I want to change gears a little bit after talking about the enormity of those two pieces of news, and I want to shift to this. Remember when we talked about ARCA and we talked about the Ethereum-based SEC registered fund that is now able to offer tokenized treasury bills from the United States? You hearing this? Don't go to sleep on me now. The U.S. Treasury bills tokenized through ARCA Labs on the Ethereum-based network approved by the SEC. We covered this back July 6th when it came out. We covered it when ARCA first applied months ago, right? So, okay, I know the first reaction from everybody right now is simply that, hey, well, that says Ethereum. Why are you so excited if we cover Ripple XRP primarily on this channel? Well, for one, there's going to be more than one winner out here in the space. Number two, the reason I'm bringing it up is because you remember this? Building bridges at the ETH conference or hackathon in Denver, when Ripple attended and went out there with the specific goal in mind to connect the Ethereum network with the ILP and the XRP ledger. And if you remember, even before that time, there was this, which was the 35 million worth of Ethereum sent through the ledger late last year. It was August, I believe, yeah, across the ledger of 35 million worth of Ethereum. As it turned out, it might have even been more than that. So pretty remarkable that this has already been in play, right? Okay, so now let's get back to it. So now we're going to shift gears again because we see that there's been interoperability made between the Ethereum network, ILP, to the XRP ledger. The Ethereum network is now working with, ARCA is now working with the Ethereum network to provide a ER token. It is not an ERC20 token. It's actually on a different network. I think it's 1404 or something of that nature. It's a different than the ERC20. It's on its own network on that system. So they are offering now tokenized U.S. Treasury bills. That is the bond market. That is a big deal. And so is this. R3 CEO starts Ledger Edge blockchain platform for corporate bonds. Now, government bonds, corporate bonds, two different things. But yet nevertheless, generally speaking, bond market, whether we're talking about government bonds or corporate bonds. The fact that we're beginning to see this happen in different areas and networks, whether it's R3's platform or the Ethereum network, this is exciting to me. And you guys know I've not been shy about it on this channel. The bond market is the backbone of the monetary system. If the bond market collapses, you've got nothing. How big is the bond market? Well, according as of 2017, the size of the worldwide bond market is $100+ trillion. The bond market is a part of the credit market with bank loans forming other main component. The bond market is so important, right? It's where the liquidity of the world really is. If the bond market were to crash, that would mean investors aren't certain the U.S. would be able to pay back on any debt it takes on in a reasonable amount of time. In other words, people stop lending the U.S. money because they think the U.S. will default on the loan. This is why the bond market is so extremely important. And this is why I think it's so important to understand that XRP is currency. And the reason I say that is because not only does it need to be currency so it can in fact settle all of the money of the world, but it can also help to settle, as we know, the commodities of the world, right? And all the different things of assets of value that have been tokenized. I don't believe you can have a system, if XRP is truly supposed to serve as to sit in the middle of all of these things of value, I don't believe it can sit in there and function properly unless it's simply a currency. This would have huge tax implications in a positive way, because, and the other huge thing here is that the world and all the governments already understand how to regulate currency. So truthfully, when you hear Ripple say we need more clarity, they even stress we don't need more rules per se, we just need clarity. I happen to personally believe that clarity is a designation that XRP really is a currency, whether you want to call it a virtual currency or supranational currency or super currency, bridge currency. It's a currency. And I don't think in any other term does it work to be able to exchange as a neutral reference point to sit in the middle of all these other things of value unless it is a currency. Okay, now let's get back to this, because now we get to Judy Shelton. I've actually played this whole segment or segments of this interview from Kemp Forum back in 2017 from Dr. Judy Shelton. But because she is getting ready to go before a vote for confirmation, which they said as of late, we understand she should pass through. But I want you to hear some of exactly how she sees this system working in a gold cryptocurrency way. What she explains here is more in a gold bond market way. And I want you to pay very close attention, and we're going to dialogue on this after or throughout the clips. So here we go.
An audacious agenda. The overall goal would be twofold: to begin to reconnect U.S.
I don't understand why we don't have volume. 1 second, guys. This is baffling to me here. Just try to refresh this page, see if that has something to do with it.
Let me offer a modest proposal. A modest proposal with a bold agenda, or as Jack would say, an audacious agenda. The overall goal would be twofold: to begin to reconnect U.S. monetary policy to the real economy so that productive, entrepreneurial, risk-taking, job-creating activity is supported, and to encourage America's trade partners to join us voluntarily in taking a small step toward considering new arrangements for a stable international exchange rate system to support global free trade and capital flows. Here's what I propose as something useful and constructive our Treasury Department could do, and do quickly. We could offer a Treasury debt instrument that included a gold convertibility feature. Why gold? It doesn't have to be gold. But since central banks in over 100 countries already hold gold as part of their international reserves, it seems a good, neutral reserve asset. And in my mind, a way to avoid political resentments. So, let's imagine a U.S. Treasury instrument that works like this. On the day of maturity, the holder of the Treasury bond would be entitled to receive back either the face value of the bond or a pre-specified amount of gold. Now, we'll say that again. The day the bond matures, the bondholder gets back either the face value on the bond or else a pre-specified amount of gold. It is their option. So, for example, let's say this bond, we'll call it a Treasury trust bond, is going to mature in 5 years. And let's say the current price of gold is $1,260 per troy ounce. To keep things simple, let's say the face value of the bond is also $1,260. So on the maturity date, the holder of the Treasury trust bond can elect to receive either $1,260 or 1 ounce of gold, their choice, on that date 5 years from now. How much would you pay for that Treasury debt instrument? Well, if you figure the dollar price of gold is going to remain stable over the next 5 years, so that the future price will be the same as today, $1,260, well, you wouldn't pay anything extra for the gold convertibility option. What you would be willing to pay would be the discounted value of receiving $1,260 5 years from now, based on the current rate for a 5-year Treasury note, which is about 1.75%. So you would be willing to pay roughly $1,155 today to receive $1,260 back from the Treasury 5 years from now. That's the present value that equates to a 1.75% yield on your investment, which is the current interest rate on 5-year Treasuries. But let's say you are concerned about dollar stability in terms of gold. You think it's pretty safe to lend money to the U.S. government, but you'd be willing to pay something for insurance in terms of future purchasing power. You see gold as an acceptable monetary surrogate. You're thinking, what if U.S. economic growth proves disappointing and the Fed decides to go back into quantitative easing mode to supply more liquidity? The dollar would likely depreciate against gold. Maybe you think Congress will run bigger future budget deficits, and you worry about the impact from that on the dollar. As a Treasury debt holder, you want to be compensated for any future loss in purchasing power due to dollar depreciation in terms of gold. By purchasing a Treasury trust bond, you've locked in the option to receive an ounce of gold at maturity 5 years from now instead of $1,260 depreciated dollars, and that matters because it would cost more dollars now to buy that gold ounce. You have effectively protected yourself from the potential loss of dollar purchasing power in terms of gold over the life of the bond. Think of it as something quite similar to TIPS bonds, which the U.S. government has been offering since 1997. Treasury inflation-protected securities compensate the bondholder for any loss in purchasing power due to dollar depreciation in terms of the Consumer Price Index. If inflation goes up over the life of a TIPS bond so that dollars are worth less, the bondholder is compensated with additional dollars so that they have the exact same purchasing power they had when they invested. With Treasury trust bonds, which I'm advocating, the bondholder is similarly protected. If the purchasing power of the dollar depreciates as measured in terms of gold, they will likewise be compensated by receiving the same amount of gold they could have purchased on the day they invested. It's pretty straightforward, actually. And maybe it's the kind of thing that grandparents buy for their grandkids. Maybe the Treasury initially offers it as a savings bond. It would be a novelty, because for the first time since the end of Bretton Woods, it would establish a link between the U.S. dollar and gold.
Okay, there's a lot in that. That is pretty powerful. Okay, so now we have that, and then I'm going to take you to, first of all, let's just take a breath here and take in some of what she's talked about here. So she's talking about introducing a bond market to back the currencies that is backed by gold. So you create what she gives as an example as a 5-year bond market that's created, possibly a U.S. Treasury instrument that's developed, which would be a bond. This 5-year bond, as she puts forth, you could purchase, and when it matures, it would be worth 1 ounce of gold, or the equivalent of, in 2017, as she gave the example, of what gold was per ounce. And that would track gold to wherever it goes. Okay. Well, we've heard the notion and the conversation, we've certainly talked about it here, about the idea of a gold-backed system. Some people say gold-backed XRP. I think more of it in the way, more indirectly, like certainly gold could be on the ledger, right? But what I've been entertaining lately that I want to speculate and get your feedback on specifically is the idea of the CBDCs, the major currencies of the world, which are absolutely developing central bank digital currencies right now. For the 4 or 5 major currencies that would sit in the SDR basket, let's say, create their network on top of the XRP ledger, potentially. And all of those major currencies back their digital currency by gold, bonds, which are physically redeemable. I think this would provide confidence to the new digital dollar. I think in the same respect, you also have created a new bond market. That's why I showed you the stuff about things that are happening with corporate bonds and U.S. Treasury bills and bonds with ARCA. Maybe it's done on another network and it's all interoperable through XRP. It really doesn't matter because XRP Ledger has the interoperability with the combination of the ILP and the ledger itself, right? Most people lose sight of the fact that the XRP Ledger is a decentralized exchange. So it has this ability. Okay, so with that being said, I want to go on to another piece, but I just want to think about the notion of maybe the central bank digital currency system that's being developed is backed by this gold bond market. And you'll hear in this next clip that Judy Shelton is going to talk about an example of China developing the same bond market for their country and their renminbi. Now I want you to listen to the effects of this that she talks about if each country were to do this. It's quite interesting.
It might be a good way to explain to the next generation.
Here we go.
As much. I would say it was the IMF that dropped the ball. So now let's go back to this Treasury Trust Bond initiative. What if China immediately followed suit and issued their own version of a Chinese government debt instrument that could be redeemed at either its face value denominated in RMB or 1 ounce of gold 5 years from now? Markets would decide what to pay for that instrument with the market-determined interest rate on 5-year Chinese government debt embedded into that price. And now think, U.S. Treasury trust bonds and China's equivalently structured government bonds would essentially be worth the same thing 5 years from now, 1 ounce of gold.
So let me just stop right there. So what she's saying is that because you've put gold behind each currency, that as it's physically redeemable at the end of that 5-year bond in China and in U.S., it's still worth 1 ounce of gold. Let's keep going here. No matter what country you're in, let's keep going.
Each one denominated in a sovereign currency, but both convertible into the same monetary reserve asset at a specific price. That suggests an implicit future exchange rate between the two currencies based on $1,260 as the face amount on a Treasury trust bond, and let's say at a 7-to-1 ratio, 8,820 RMB on China's government bond. If both instruments sold at par, the implied future exchange rate could effectively become a self-fulfilling prophecy. Now, if the price of one nation's bond comes under market pressure, that's a clear sign the market anticipates one currency depreciating relative to the other in terms of the neutral reference point, gold.
Now here she uses a neutral reference point as gold to level the playing field behind everyone's currency. We're going to talk about this in a second.
That will send an important signal from investors about the growth prospects for that nation and about its fiscal and monetary policies.
Now that's an important key point that she makes right there, because what she's talking about is because the reference point in her scenario that she's putting forth here, an ounce of gold is an ounce of gold. And if there's any change or fluctuation to the monetary value to that ounce of gold, it happens within that country. And investors can analyze what's going on within that country. Let's keep listening for a second here.
It could be a very useful tool for the Federal Reserve or the People's Bank of China. Just as the yield on TIPS bonds today helps the Fed gauge aggregate expectations about future inflation, Comparing the performance of these parallel instruments would reveal investor expectations about the relative stability of the dollar and the RMB in terms of a neutral reference point. It would provide a starting point for evaluating the trade impact of shifting currencies. We might even go so far as to suggest that in the future, governments might agree to intervene to maintain the par value of their own sovereign debt instrument linked to gold, rather than target a daily fixed exchange rate against a trade partner's currency as China does currently.
Wow, that was massive. Again, here it goes. It's the government being responsible for the valuation of their own currency. In the proposition she puts forth is that you minimize the effect of any devaluation of currency going on affecting any other country's currency or trade because of backing the system by gold. Now, one thing I have to suggest here in this equation is that it seems like it's a really great idea. Couple of things. Well, certainly I'm not a scholar or a doctor like Mrs. Shelton, so forgive me for the backyard economics, but I'm rather unsophisticated. But I will say that, the original gold standard was physically redeemable behind the US dollar in the 60s. One of the main reasons they discontinued it is because it was physically redeemable and people were beginning to redeem it for gold, and it was causing a problem between the fluctuation to the gold rate peg, right, to it being backed by that. So I could see that being an issue, that it's physically redeemable. However, maybe not. Maybe not. If you were to introduce XRP to sit in the middle of the 5 major currencies or all the currencies of the world and have XRP sitting in the middle, it might not be as hard to envision. And the reason that I say that is because if XRP sits in the middle and each country, whether it's the Swiss franc or the euro or the Thai baht here or the Indian rupee or the UK pound or South Korean won, whatever it is, let's for the sake of speculation to expand on Dr. Shelton's theory and idea here, if they're all backed by gold-backed bonds supporting their central bank digital currencies that are launched, and XRP sits in the middle of them as a true neutral asset to exchange, then really what you have done is you have isolated each country's dollar strength or weakness to within its own borders. Because they can use this proposed bond market situation to make sure that they've either not printed too much if they have the ability to print in their country, or to print when needed, right, to keep the backing and the strength of the dollar where it needs to be in their respective countries. And it would affect their monetary policy within their nation. But I also think at the same time, if they do this as they shift to a digital currency, central bank digital currency, you create confidence. Because gold has been money since the beginning of mankind. You create confidence, and you create confidence to shift people from the traditional infrastructure of finance and investing, especially in the bond market, and entice them to move over into this new digital market. And it's not just for that reason. In my estimation, what you're really doing is bringing everybody over into the new financial system, which would have XRP truly sitting in the middle like this diagram, but supporting the digital currencies with a gold-backed bond system, bond market, for each individual country, which makes them solely responsible to keep the dollar strength to their new gold-backed bond market where it needs to be for their citizens and country or and companies and entities that are going to buy, trade, and sell with and without that, within and without outside of those borders. Excuse me. This to me is pretty interesting. I mean, in 6 days, they're going to vote whether this woman will be confirmed to the Federal Reserve. We all know that she's talked about handling things in a gold cryptocurrency way, a back to the future kind of way. So this would be quite interesting, because what else I would see is seeing the bond market that she's talking about be tokenized and digitized as well. And this, like I said, I think the important thing about this is not only getting this new idea or system proposed and in place so each country can truly be held accountable to their own strength or weakness to their dollar and the market that they have in their country, and not be able to devalue their currencies or try to push their currency up in whatever regard they try to handle it and manipulate currency. It would only hurt them within inside of their borders. It's about getting a level monetary playing field. And I think if we get Judy Shelton a confirmation to be in the Fed, I know there's 12 seats there, but maybe, just maybe, we get one step closer to where we need to go. All right, guys, I apologize for the long video, but I hope in some way we've been able to continue this conversation and really, really get a good positive dialogue going on. I want to hear your thoughts about whether you see a gold-backed XRP possibly, or the potential of the gold-backed monetary system of the currencies, the central bank digital currencies like Judy Shelton's proposed, with a gold-backed bond market. All right, that's going to do it for me. Hit the like and subscribe, guys. I'll catch you on the next one. Make sure you share this with somebody you know.